Good morning, everyone. My name is Gunnar Fye. I am the Director of Operations here at Impact Wealth, and I have the pleasure of introducing Jim Teagarden, our CEO and advisor with Impact Wealth. He has over 30 years of experience working in the industry, seen thousands of retirement plans, and today he's going to be covering a topic that we believe is often overlooked and underutilized in a lot of financial plans, that being long-term care. So, without further ado, I'm going to kick it over to you, Jim, to get us started.
Got it. Thanks, Gunner. Appreciate it. Yeah, I was thinking Valentine's Day is tomorrow and thinking about that big heart, that love, and thinking one of the biggest gifts we could give our family is to identify the options for taking care of problems like long-term care. So my vision is love for family here. So in our experience, as Gunnar was saying, long-term care is a topic that is just underserved. I think financial advisors, investment professionals don't really know how to plan. They don't know what the options are, and therefore a lot of folks are left underserved. So, in this, I would say core retirement marketplace, call it 2 to 15 million in net worth. Um, there are a lot of options that are available that I just feel like the industry and the general marketplace doesn't understand. So we're going to be talking about long-term care, what it is, what the problems are, and why you should address it today. Oops, let's see here. I'm struggling again for moving. Am I sharing?
Yeah, that looks good.
Um, Hold on. A little technical difficulty here. There we go. Disclosures, of course. We are part of Madison Avenue Securities, FINRA broker-dealer, part of Singe Advisory Group, about a $4 billion RIA. And we're not giving advice here, tax advice or other. Uh, we're not giving education advice. We can't say that either. So anyway, uh, getting into this. So most retirement plans or most financial plans cover income taxes, even some estate planning, but they skip a very big risk that can derail all the other things, and that is long-term care planning, often missing. 70% of all folks that are over 65 years old will need some form of long-term care. And of course, earlier you plan, the more options you have in this regard. So it is a very high statistical probability that one or both in a married couple will need some sort of long-term care. And I'm still struggling with changing my screen here. I don't know what's going on. Um, Gunner, I'm gonna go back to this restart. I don't know why it can't change. Um, okay, kids, sorry about that. I don't know what's going on. So what is long-term care? Long-term care is not medical treatment. It's really help with daily living. Okay. And a long-term care event begins when either a doctor certifies that a patient can't do two of the six activities of daily living. So they need help with those things, at least two of those, which we'll talk about, or they have a severe cognitive impairment. The activities of daily living are the basics: dressing yourself, being able to bathe yourself, continence, being able to get in and out of bed or chairs, being able to feed yourself, being able to toilet, take care of that yourself. So if you can't do two of the six activities of daily living, you qualify for long-term care. Severe cognitive impairment, this seems to be getting more and more of an issue at younger ages. We see it all the time. So Alzheimer's, dementia, Parkinson's, so memory orientation issues, judgment, safety concerns. So those are the big ones regarding long-term care. So there are some misconceptions, I think, in the marketplace. Long-term care is a lot of folks think that is nursing home insurance. The truth of the matter is most care happens at home or in assisted living, not in a true nursing home. Another thing that people think is, oh, my health insurance covers it. That is not true. Health insurance covers medical, not custodial. I think Medicare will take care of me. That may be a little bit of the case. We'll talk about that, but it's very limited to skilled care coverage. And Medicaid. In our marketplace, I think most people understand that Medicaid is not going to be available for them. That's really for folks who really don't have any other assets. So, and I think another myth is, hey, that self-insurance risk. I've got some capital. I'm not worried about it. I can pay for what I need. So actually, that brings up a good point. In study after study shows that retirees, their biggest financial fears are number one, running out of money or not having enough money to fulfill their lifestyle. And that's followed generally by about the second or third biggest fear that folks say is, what about a home health care disaster or a medical emergency? They're not quite clear on how to define that, but what they're really saying is, do I have enough? And what happens if I have a big issue? And then I would go back to that myth, which is, oh, I have money, I can take care of it. And I think for our clients, it's not a question of not having money. It's a question of how do you get the most leverage and plan for the future. So where care actually happens, this is a study that shows that 42% of all care comes from informal places. It's not just assisted living, formal health, home health care, or nursing home coverage. So almost half of the expense side of the equation comes from informal care. Um, Medicare versus Medicaid, just a quick highlight here. Medicare may cover up to 100 days of skilled care, usually requires at least a 3-day hospital stay prior, and is really not designed for longer term custodial care. It is a kind of a snapshot, take care of short-term issues. Medicaid, as we talked about, really is for folks who really don't have other assets or have spent down other assets. So, and for those who have dealt with family members who have had Medicaid style care, the choices are very limited and not always the best. The expense, you can go online. We can share with you a lot more statistics. We get into this in the planning side, but it's really, per year, just having a home health aide coming into your house is 60 to $75,000 a year. Assisted living, 55 to 65,000. A private nursing home room, 100 to 120,000 a year. I think these depending on where you live, these may be substantially higher. I think this is just kind of national averages. We can dial into certain demographics, different areas to show a lot better as to what the cost of care is, and more importantly, what it's going to be with inflation going forward. So it's not uncommon to have a $300 to $500,000 care event per person. And we see folks that are spending a whole lot more than that on care as well. So it's going to be a very large problem. And in as I've observed over time, a lot of times it's not just the financial cost, it's the emotional toll that is the hardest cost to families, where spouses, as they're aging, become the primary caregivers, and children have to make decisions under pressure. They've got less planning, fewer choices, more stress. Family discord is something our clients don't talk about a lot, but they don't want it, I assure you. And a lot of times there's one of the three or two or five children who takes the biggest burden. So there's a lot of guilt around this and a lot of poor decision making because of the financial side of the equation here that I think may be as important as anything else. There's four common planning approaches: traditional long-term care insurance, pay as you go. Um, that's one that the marketplace has struggled with over the years. Premiums have gone up, benefits have gone down, not a lot of guarantees. We call that like fire insurance. You may pay for long-term care insurance for 10 or 20 or 30 years and never get a benefit from it. And I think that's like a lot of people don't want to spend money where they don't have to, obviously. Number two, life insurance with long-term care riders. These are relatively recent in the last 5 to 10 years, really. And these are chronic illness riders, we'll refer to them as a long-term care rider built into an existing life insurance policy, either term or a permanent policy. Typically, with today's good products, there's not a charge adding to the life insurance side of the equation for these riders. The insurance companies have basically tried to make their policies more valuable to clients so they can sell more life insurance. So there's long-term care riders. A lot of policies today have those. Generally, I would say there has to be a need for other insurance, but this is a nice hedge for those folks. Um, and there's also critical illness riders, which is quite, very few carriers have a critical illness rider, which is really not a long-term care event. It's more akin to a major health change, uh, Alzheimer's, et cetera. You can accelerate the death benefits tax-free while you're alive. We've got multiple stories. We've paid those out before. They're very powerful. We're going to focus, however, on three and four. These are really long-term care focused products. One of them, we just call it hybrid long-term care or life insurance chassis based long-term care. And then we're going to talk about annuity-based long-term care strategies. And, basically what we're saying is insurance companies can do something for individuals that they cannot do on their own, and that's spread risk. And so these products have gotten very uh, flexible and very powerful for our client base. So a little bit kind of comparison table that from one to four, that traditional long-term care generally is the max long-term care for the lowest cost. Um, Premiums are not generally guarantees or benefits. It is a use it or lose it type of structure, and it is also hard to qualify for. If you want that type of policy, you need to be healthy and be able to get it. And I would suggest to be younger in age and healthy. So, life insurance with long-term care rider, we talked a little bit about that. That's you need death benefit coverage or you have a policy for retirement income and it has a built-in long-term rider built into it as well. Those you really have to qualify for the life insurance side, typical life insurance underwriting. But it is not a use it or lose it. You are going to have a death benefit or cash value or long-term care benefit. This hybrid long-term care, the life-based long-term care policies, these are really where you want guarantees of premiums and benefits and a long-term care focus, no rate hikes, medium to high leverage on your dollars, um, premiums guaranteed. It is not a use it or lose it. Similar type structure. If you pay premiums into this type of policy, they have a cash surrender value. So if you ever needed money, you could get at the cash surrender value. If you never have a long-term care need, you're going to get a tax-free death benefit for your spouse and children. And then I would say it is a medium kind of underwriting difficulty. We'll talk a little bit more about that in a moment. Easier to qualify for than in a lot of ways than a traditional life insurance policy, but there is some underwriting requirements. Um, and now the annuity-based long-term care. This is really for folks who have maybe have a need for existing annuities for their retirement income situation, or they're very hard to insure and they can't qualify for any of the other options. So that we would say the leverage is maybe low to medium, but premiums are guaranteed. It is not a use it or lose it, and there's a very low underwriting uh, burden. Okay, stuck again. I do not know what I'm doing here. Let's see if I can make this go. Okay, what did I do? Okay, here we go. All right, so we're going to focus on number three, hybrid long-term care. This is a 62-year-old preferred non-tobacco, healthy female. And we just did this on a $100,000 single premium. So the client would put $100,000 in today. They have some options. They don't have to do a lump sum. They could do annual payments over time. But here, we're just saying $100,000 goes into premium. It has built-in inflation protection, a death benefit, and we just said, hey, initially, as soon as you put the $100,000 in, you've got a $412,000 immediate long-term care benefit. You've got an immediate $130,000 of death benefit, and you've got immediate $54,000 of cash surrender value. If you look out at age 80 with inflation protection on this, the total long-term care benefits would be about $576,000. death benefit of 130,000 still. So obviously, if you didn't ever need long-term care, you got a slight return on your money, not a big one, but a slight one. And it even still had a $90,000 cash surrender value at that time. Um, so for long-term care like this requires, um, I'm just sorry, looking at notes here. Um, Typically, our clients who apply for this would answer 5 to 7 questions. If they answer the yes to those 7 questions, generally they can get this policy. It is followed by a 30-minute phone history interview. And the client, and there's different rate classifications, but the carrier, it's pretty streamlined underwriting. But if they have major health issues, they may or may not be able to get this type of policy. Okay, so a little harder than what we're going to talk about next, which is the annuity based. Okay. On the hybrid long-term care annuity chassis, this is really great because you can get it with no medical exams required. It's got built-in inflation protections. Um, it is a single premium design, generally speaking, so it might take a larger lump sum than the life-based option. But it basically can transform your existing savings into a larger pool for long-term care. Um, so for folks who may have medical issues, struggles, not be able to get any of the other types of long-term care, they can get coverage here. Okay. So here is that same 62-year-old. So with 100,000 of single premium in here, there is a 5-year vesting schedule on benefits. But once you hit the 5 years, you can see there on the right-hand side, the initial benefits, if you put 100 in, you've immediately got 144,000, and that scales up every single year for the first 5 years to 100% benefit. So whereas the life policy, you are immediately covered, this one takes 5 years to get to the full coverage on the long-term care. It does have a slight death benefit should you die, and a cash surrender value there of $90,000. At age 80, those long-term care benefits total about 515,000. There is a death benefit if you didn't use the long-term care of $280,000 or a cash surrender value of $280,000. So what this basically shows is 3 levels. This happens to be one particular product. We use it a lot. And effectively, if you're healthy, you're going to get immediately, if you put 100,000 in, you're going to have a $350,000 benefit pool once you get to year 5. Okay. That's an annual benefit of $70,000. So you're basically getting 3.5 times your money on that from a long-term care leverage perspective. It is a fixed indexed annuity, so it is still the cash value is growing based on markets going up. But there is a cash component as well as a leverage for long-term care benefits. If you have had some fairly significant health issues, but you're cognizant, you got your wits about you and you're managing yourself, you're independent still, you can get the standard, which takes your 100,000 to $240,000 benefit pool. And the third or last option, if you can't get anything else, you can qualify for this secure. You can be on long-term care payments. You could be in a facility and get put 100,000 in and immediately have 157,000 of benefits, of course, with the vesting over that first 5 years. So very simple to use. It layers right into overall retirement planning, and you're going to get some leverage one way or another here. So very easy underwriting, very simple. If you answer the questions correctly, you've got a 30-minute video conference with the carrier, and they tell you what you can get right there. So very fast, quick, easy, and fits right in with the rest of your retirement planning if done correctly. Um, so obviously for business owners, execs, high income professionals, retirees, folks that want to protect and preserve their assets. Um, and in our opinion, I would say that our clients are really saying, I like this type of leverage. I didn't know it was available. because I know there's a pool of a $500,000 or 300,000 or $1 million that will be spent if I need long-term care. And guess what? If I don't need it, I haven't wasted premiums over the next 10, 20, 30 years. So um, the other thing I would add is um, one of the differences between these life insurance annuity-based contracts is they are indemnity. So if you qualify, you take the money and you use it however you want. It doesn't matter where you spend it. Okay. You don't have to get receipts, get reimbursement from the carriers. It is not it is so easy from a claim perspective. Whereas the more traditional long-term cares are typically reimbursement. Literally, you have to send receipts for expenses to the carrier and get reimbursement on those policies, a real administrative nightmare. So, indemnity versus reimbursement is very important. I would suggest to you have, like a lot of things, we have access to firms that assist us in making sure that we have the best options at any given time that are available in the marketplace today. So one of the reasons we're independent is, and by the way, we can't do everything perfect, but with great partners and being in the independent space, we can go to all carriers um, and always have the very best contracts available. So, if you're ready to focus on this, build a strategy tailored around your income, your business, your estate planning goals, etc., let us know. Book a session with us. We'll get back to you. And you can send an email to Gunner at impactwealth.com. You can go on our website, impactwealth.com. We're in the middle of revising that. These webinars, by the way, are available. I'm not sure every one of them is on our website yet, but they will be shortly. If this is valuable to you and you want to have a link to the webinar, just let us know. Um, and I think that's what we have for today. I think I'll just open it up here, and we've got a few minutes for a couple of questions here. Gunnar, do you have any questions that have come in or any thoughts that
Yeah,
we?
yeah, it looks like we've got a couple questions came in here. The first one is, what age should I really start to take a look at planning for long-term care, and what are the drawbacks of waiting?
Yeah, I think the um, in general, I would suggest that 55-year-old mark is when we start talking about it a lot. It depends on where you're at, really, but 55 to 65 years old is the prime spot. Obviously, the sooner you plan, this is true for anything, the sooner you start focusing and having a plan, the better your options are down the road. We have a lot of folks who we work with that maybe are a little older or have had some health changes, and their options go down, quite frankly. But I think the good news is, no matter where you're at on this, you ought to be starting to look at them to find out what's available now versus later. It's always best when you're healthiest. So, but yet that gets really integrated into your overall plan. If you don't have an overall uh, financial roadmap that gets back to the planning side of things. What are my assets today? What are my income? What are my expenses, taxes? What does this look like down the road from an inflation perspective? If you haven't done the basics of that, which is a lot of what we do with our clients when we initially engage, then you don't, then you're just shooting in the dark on anything you decide to do. So an integrated approach makes a lot of sense. But I would say that, late 50s, early 60s is the prime spot for this. That answer that question?
Yeah, that's great. That's great. Two more questions came in here, Jim. The next one is, are there any other options for paying for long-term care coverage outside of a single payment? In the two examples that you shared, it was a single premium payment. So are there other options for
Yep.
paying for coverage?
Yeah, I think the obviously we'll set aside the traditional pay as you go is a monthly or quarterly or annual payment. And those payments aren't guaranteed. They go up, benefits change. Set that aside. The life insurance with hybrid or with riders, that's really a separate discussion. So on the life-based hybrid long-term care policies, you can do them in a lump sum, or you can get the same exact benefits and you can spread your payments out over 5 years or 10 years or 20 years. So you can, in our opinion, that flexibility helps our clients meet their goals. They don't have to stuff 100,000 or 200 or 300,000 into that up front. Okay. So that's a good question, and that is easy comparison on benefits. The annuity-based long-term care, they are lump sums. So we say, hey, you've got 100 or 200 or 500,000 in safe money anyway. Maybe it's in cash, money markets, fixed income, or other annuities. You ought to, might as well move some of those safe monies in and get them leveraged right away. But those are lump sums. So,
Good. That's good.
yeah.
And the one more question we have here is how do you determine the appropriate amount of coverage for an individual when discussing long-term care?
Yeah, I think that gets back to you know, we know or we find out what our clients' really balance sheet is and what their retirements, let's build out first and foremost, what is their retirement income plan? Where's their money coming from for retirement? And when we do that, we're building in margins for inflation, taxes, special kind of expenses that might come up. One of those being long-term care. And that really drives what you have and what you need drives the amounts. And it isn't a science, I would say. A lot of this really has to do with facts and circumstances. But once clients understand the leverage they can get and how they're not really giving up much to do this, that's where they really love this. And it just fits right in. So I don't know why the marketplace is so underexposed. Um, I just think the traditional investment advisors and financial advisors don't know what's out there. And we see it every single day. Just 8 out of 10 folks that we talk to just don't even understand what's out there in the marketplace today. And so I'm not sure why, but we do see it as a very large hole in the planning marketplace today. So
That's
I
great.
hope that was helpful. Clarity, confidence, family unity, making sure things are taken care of, really frees our clients up to be able to do what they do best, which is, have an impact in their world. So that's what we're trying to do here. So appreciate you all. Thanks for listening in. If you want copies of this, let us know. We can send you the video, and check out our website. Let us know if you'd like to schedule a time to talk. Forward it on to the folks that you think might need to hear it. So we appreciate you all. Appreciate you all. Have a great long weekend. We'll be back here in 2 weeks. We've been doing these webinar series for a couple weeks. Every couple weeks now since December, January, February. We'll keep on this. Got a lot of great topics that we've talked about in the past and that will be upcoming. So let us know what you think and let us know if we can help. We appreciate you all. Take care.